Good morning, Kim Chan Kasaka. Today we are gonna be learning a basic difference about bookkeeping and accountancy. Actually, the difference must be between bookkeeping and accounting, but since here it is given difference between bookkeeping and accountancy, we'll start with that. First of all, we must know that bookkeeping, under bookkeeping, we have IMRC, which is identifying a transaction. A transaction is exchange of goods and services for money or non-money considerations, basically for purpose of money or without a purpose of money. For example, in case of barter system, that's also a transaction which is goods for another goods, and where the money is involved it is a monetary transaction, and where monies are not involved it is non-monetary transaction. And your money doesn't exactly means cash or bank. It is basically cash and cash considerations, means cash and other cash forms, for example bills of exchange, promissory notes, and all. Okay, so let's not go in deep into that. We must first understand bookkeeping is about identifying a transaction and measuring those, and here these transactions we are considering in terms of monetary forms, which are basically monetary transactions. We are not going into a barter system. Then comes measuring of those transaction in monetary terms, and then recording those transaction. Yeah, now recording is done in two books. It can either be a specific general or general. A specific general is a specific journal is subsidiary books under which various transactions of same kind are maintained, for example sales book, purchase book, and so on and so forth. And another comes a general journal, which means we are just keeping a journal book. We are not keeping different books for same kind of transactions. Basically we are recording everything at one place, which is a journal. So recording in a journal and classifying them into ledger accounts. Ledger accounts are the accounts basically which takes in records from the different journal under a particular subhead. Okay, so we classify into ledger, record in journal, measure in monetary terms, and identify those transactions in opposite order. Then comes accounting. Accounting is summarizing the classified journalized transactions into trial balance, from which we interpret. And summarizing has two forms, by the way, which is first preparation of trial balance, like summarizing in trial balance, from which we make balance sheet, which, and second statement of profit and loss, which is P&L account. And balance sheet shows financial position and P&L account shows financial performance. So summarizing our financial data in trial balance so that we can prepare a financial position, we can measure financial position and measure financial performance, and so is that known as summarizing our financial transactions. And from that we interpret our results. Interpreting and analyzing, in that basically it's ratio analysis from the data which is collected from balance sheet and P&L. Okay, ratio analysis, you can say measuring of earnings per share, measuring of stock, analyzing the stock data, cash flow statements. You interpret, you start finding a result, start understanding what is prepared in accordance with balance sheet and P&L. What is the things that are affecting them, and so it is affecting your business. You'll start interpreting, understanding, analyzing your financial statements, which is balance sheet and P&L. And then comes communicating. After you understand, after you interpret your financial result, financial performance, you communicate that to your users. Because if a financial statement and the understandings of the financial statement are not communicated, it is no use of undergoing such a long process. So communication is one of the major process under accounting. So we have bookkeeping, which is IMRC, and accounting, which is SIC. Okay, so and this both comes under accountancy. So accountancy is a subject. It is a subject of study of accounting. It is a study. For example, we have examples of them is, for example, we have biology, we have physics, and so that is accountancy, which is a subject or matter for studying. Okay, so it is a study basically of what? Bookkeeping and accounting. And you must know a general information: accounting is a language of business. Without accounting, your business understandings of the business cannot be communicated to the users of the financial statement. And so let's read the difference now. It is concerned with recording, classifying the business transactions, recording in journal, classifying into ledger. It is related to recording, classifying here because accountancy is group of both bookkeeping and accounting. So this classifying and recording comes under bookkeeping part, and analyzing, interpreting and summarizing comes under accounting. Now bookkeeping is the primary stage. First, of course, we'll maintain a record, and later after this primary stage ends, our secondary stage will start, which is analysis and interpreted of the records which are maintained under bookkeeping. Objective of bookkeeping is to keep the records, is to maintain the records, is to maintain the record in books of what? Organization, so that we prepare uh, our data and transactions in a chronological form as per date wise. Objective of accounting is to prepare the financial statement. Since our financial information is summarized in trial balance, our aim is to prepare and our financial statement, which is P&L and balance sheet, which shows us financial positions and financial position accordingly. Now it is maintained by junior staff because nowadays everyone can pass journal entries, but accounting is done by senior staffs because it includes interpretation analysis, which is a high level job. Bookkeeping basically results in journal and ledger, because journal is recording, ledger is summarizing. Bookkeeping gives us day-to-day information and details because we maintain data in a chronological order. Accountancy gives details of the entire year, of course, because we are preparing a financial statements, and the result of accountancy is profit and loss. This is basically a financial statement. You can also add cash flow statement in our financial statements. Now, the process of bookkeeping does not require any analysis, whereas accounting does require interpretation and analysis. Decision making: management cannot take decisions based on data provided by bookkeeping because it's simply recording or maintaining a data, but understanding the data, using it into life in a business, is what accounting is. Okay, so because accounting, that's why accounting is said language of business and not bookkeeping, because bookkeeping is manual and accounting is intellectual. Analytical process is not involved in bookkeeping, whereas analytical skills are involved in accountancy. And another thing you must know, that bookkeeping and accounting, about bookkeeping and accounting is where okay, wait, where bookkeeping ends, accounting starts. Where bookkeeping ends and accounting starts. So end of bookkeeping is start of accounting. Okay guys, I hope you all have understood this basic difference, and I have tried my best to make you learn from right from the bottom of the entire terms. In case of any issues, just let me know in comments. Okay, okay then, bye bye.